the right mortgage can make a huge difference in the home buying journey, and having a great lender by your side makes it so much easier. Today, we're excited to chat with Shane Hartje from CMG, who has helped so many people turn their home ownership dreams into reality. Thanks for being here, Shane. So let's start with our interview. What got you started in the mortgage industry?
Thank you very much for having me today. I really look forward to doing this podcast with you, Regina. I got started in the mortgage industry over 27 years ago. I was doing banking for about 7 years prior to that, and some friends were doing mortgages. And I just thought it'd be a great way to help people, and I've loved every minute of it.
Oh, that's awesome. That's super cool. And so now, if we want to talk about mortgage and financing, what is considered a good credit score?
So credit scores are always fun. Everybody's different. So there's a lot of different variables that go into credit scoring. But on the conventional side, which are your normal Freddie and Fannie loans, conventional will go down to a 620 score. But obviously, if you have a 740 or higher, you're going to have a little bit better on the pricing side and on the fees. But there are plenty of products that go anywhere from 500 to anything over 740 is about the same as an 811 credit score. So the biggest thing is just figuring out where you stand so you can figure out how to accomplish your goals.
That's very interesting. So you can't say that one size fits all.
Correct. It is definitely different depending upon how long you've had credit and your payment history and different things that go along with the full credit outlook for you.
Okay. Because oftentimes people ask me, what is the interest rate today? So that's the answer then. Well, you need to talk to a lender to figure it out.
Yes.
Right?
Whenever we get the phone call that says, what's your rate today? I would love to just be able to answer that question.
Right.
However, there's about 12 variables that go into figuring out what a person's interest rate is. And that's where we just go through and build some rapport with them, figure out, exactly what they're trying to accomplish. And then we go and figure out where their score is, and then come up with a game plan to get them into a home.
Understand. Okay. So do you also guide people so that they can improve their credit?
Oh, definitely, definitely. We've been helping people for many, many years try to improve their scores if an improvement is needed. A lot of times people are good and we're ready to go right away, but I don't like to say no. I like to just say not yet if they're not set to buy yet, and help, point them in the right direction and give them some helpful tips as to how to get to where they need to be.
That gives them hope, right?
Yes, it's all about hope. And there's been plenty of clients that I started talking to 3 years prior, and we finally got them into a home because they were adamant about achieving that goal. And they would check in with me about every 3 to 6 months to make sure that they were on the right path. And those closings are the best when you can be there and see that they've made all the strides that they could make to get to there, and they've achieved their goal.
So you follow with you watch their progressing and getting always better to get a better credit score and to get the better rate.
Correct. Always reaching out to them to see if they have any questions along the journey and make sure that they're on the right path for home ownership.
Do different credit scores impact on their loan?
So with the scores varying so much, usually the range is we've seen as low as like 480, which you're going to need a little bit more help than, somebody with a 620 trying to get a little higher. But there still is a way to go about doing that, so don't get discouraged. But as far as regular scores go, we can, just take a look and see exactly what their situation is. It might even be to where the credit usage is just a little bit out of whack. They just charged a cruise or something, and they haven't made the payment on that yet. So it looks like on the credit scoring system that they're maxed out on that credit card, when really they're going to be making a payment in a couple weeks, and they'll get that utilization down. And that will make a big difference on the score sometimes because you want to have as much credit available as possible.
Of course. Always check with the lender. Always have a good conversation and a relationship with the lender.
Yes.
Right?
And it's a free pre-approval. So it doesn't cost you anything to see where you stand. And I have a lot of people that want to buy 6 months from now. Well, if they start 6 months from now, we don't have any time to fix anything, especially if they're trying to get out of their lease in 6 months. So I always recommend starting now. And then that way, if everything's good, we'll show you how to maintain that and keep it good. But if there's a couple things we need to work on, we have some time to do that so that you're not stressed.
Right. Some people are a little bit hesitant to speak with a lender because they believe that their credit is going to be touched.
Yes. So the nice part with CMG Home Loans is we do a soft credit pull to begin with. So it does not give you that hard inquiry and allows you to see where you stand without having to take a hit. There's also some myths to that hit. Yes, it does truly exist, but if you have really good credit, it's not going to affect you that much. Okay. If you've applied at 26 different places in the last week, it's going to ding your credit, and that's where the hard inquiry comes in a little bit more than, if you have good credit, you're really not going to be affected that much by it. But we do have that soft pull that we'll do so where it doesn't affect them at all to see where they stand.
How do different credit scores impact interest rates?
So it all depends on the score to see what your rate's going to be and what program you qualify for. We can go down as low as a 500 credit score if there's compensating factors and there's other reasons to be able to show that it is a good quality loan. My team just closed one a couple months ago with a 515 credit score. There were many different good variables that went with that we were able to make that loan happen. A lot of times that is not the case, but that's where we can help people and work on their credit for them. But between 500 and 580, that's FHA, which is Federal Housing Administration. And some lenders can't do anything under 580 just based on their overlays. But FHA is truly a 500 or higher program, and we follow those guidelines. Okay. So with that, up to in that range, you have to do 10% down. Which is different than regular FHA, which is 3.5% down.
I see.
So anything over 580, you have the possibility of doing the 3.5% down, but that's kind of the magic number there. And then as you get over 620, then you get into some other programs that are available with better pricing and lower fees and stuff like that. And then on the conventional side, conventional with Freddie and Fannie will do down to 620 if it makes sense. But if you're not putting 20% down, the PMI factor on that is a lot higher, and the interest rate is a lot higher due to their price adjustments. So it just depends on your situation, and that's where, I come in and help you figure out what product makes the most sense for you and is going to save you the most amount of money over time.
Of course. So when you do a conventional loan with less than 20%, you have the mortgage the insurance.
Yes.
Right?
So the private mortgage insurance is to protect the lender in case you were to go into default. But if you're doing 15% down, it's really not that much. If you're doing 10% down, it's a little bit more.
Okay.
If you're doing 5 or 3% down, then it gets to be a little higher on the PMI. But there's also some single pay options to where if it makes sense, you can buy that out with an upfront larger portion of closing cost to be able to get rid of that PMI completely. So it just depends on your situation as to what makes the most sense for you.
Okay. And when you reach that 20%, does it disappear?
So a law went into effect years ago that it's basically 78% is where the mortgage company has to have that fall off for you. It used to stay on for 30 years unless people brought it to the lender's attention, which I'm glad that Congress fixed that because people were paying a lot of extra money for no reason.
Right.
But now if you get to the 80% mark and you request it off, that's great. But then knowing that if you did forget that, usually it's about a 6 months to a year difference, depending upon loan amount, then that will fall off automatically when you get to the 22% equity in the property.
Gotcha. Yeah. Okay. Thank you.
You're welcome.
So let's talk about down payment assistance.
Yes.
Yeah. A lot of people want to buy, but they think, okay, I don't have money for the down payment. Is there a program or are there many programs that will give the buyer assistance with the down payment?
Yes. So in Texas, there's numerous programs. There's TSHAC, which is Texas State Affordable Housing Corporation. And then there's also Texas Development of Housing and Community Affairs. And then there's also SETH, which is Southeast Texas Housing Finance Corporation. They're all three very good programs. It just depends on your situation. Some require at least a 620 credit score. Some will require at least a 640 credit score. Nothing under the 620, though. So that's something to where, why it's important to do that pre-approval right away so we can see exactly where you stand to make sure that you fall within the limits of that program. Some you have to be a first-time home buyer, which is defined as not owning a house in the last 3 years. So even if you owned and sold your house 5 years ago and you've been renting since, technically in the mortgage world, you're considered a first-time home buyer.
Okay.
And a lot of people get confused by that. So that definitely helps, for some people that before COVID were owning their homes and, ended up selling in 2020. We're going into 25 now, so they would definitely be considered a first-time home buyer again.
Interesting. And Shane, what are the specific benefits for first-time home buyers?
The main benefit on a lot of these first-time homebuyer programs is to help people who have income and credit to qualify, but have just had a hard time saving up their down payment. It's a great way to where we can get a combination of seller-paid closing cost and the grant with the down payment assistance to help them to where they're able to achieve home ownership quicker than having to try to save the money on their own.
Oh, yeah, of course, yes. If somebody is helping, it's always a better way.
Yes.
Yeah. So what are the types of loans? We touched a little bit before in my previous questions. You spoke about FHA, conventional. So are there other interesting loan programs? So
at CMG, we have over 900 loan products.
Oh, my goodness.
So how long is this podcast? No, we actually have your regular programs are your conventional, which are your two government-sponsored entities, which are Fannie Mae and Freddie Mac. Those are your, higher credit scores with people putting a little bit money down, and that's where you're going to get the majority of the programs. But then there's also some government programs to help out as well because we want people to own homes.
Right.
So Federal Housing Administration is a great program, especially in the 600 credit score range, to be helping with 3.5% down. If you're a veteran, VA has a phenomenal program. You basically need your DD-214 and your certificate of eligibility, and that is a no money down program. And if you're exempt from their funding fee, it truly costs almost nothing. There are some closing costs associated with VA. So that's a lot of times if people do have some money saved up for a down payment, instead of using those funds for the down payment, they can be used to cover closing costs. Or we can get with a great real estate agent like yourself and try and get the seller to pay those closing costs for the veteran so that they can get in for literally almost nothing.
Yes, I know exactly what you're talking about because I have a veteran at home.
Great.
My son was in the military and he bought a house with a VA loan. When I asked him, so how much is your closing cost? And he said, I don't know, Mom, I got money back. So he went back home after closing with some change.
Yep. And with VA, they will give you up to your earnest money back. So if he put down, $2,500 in earnest money and everything worked out, he could have got up to that much money back.
Yeah.
So truly buying the house with no money down.
Yeah.
It's
a
great
wonderful program.
Yes.
And also there is a USDA program where people often get confused because they think that they have to buy in a rural area.
Yes. Well, they get confused right off the bat because nobody thinks about doing a home loan through the United States Department of Agriculture.
That's a thing that when you go to the supermarket and you buy a piece of meat
yes,
and you have the stamp USDA.
Yes,
right?
That's what everybody thinks of. But there's actually a loan through the U.S. Department of Agriculture that is a no money down program as well. You do have to have a 640 credit score or higher to qualify, and the debt to income ratios on that are usually a little more strict than on the normal loans because there is no money down on there. And the biggest part on that loan is rural areas are kind of defined differently now with this program than what you would think of as rural.
Right.
There are plenty of areas within DFW that qualify for USDA loans. The biggest thing is, one, getting pre-approved for the USDA loan first, and then basically there's a website that you can go on through USDA that will show you the exact property address if it's eligible or not. And that's where, if you are approved for USDA and you want to use that product, we just have to plug those addresses in to make sure that they're in a qualifying area.
Oh, okay. That's interesting because sometimes that property, you would think that it's in the city, but it's actually in an area that people will qualify to get the USDA
Oh,
loan.
yes. Prime example, up by Aubrey in Providence Village, that last time I looked on the USDA eligibility map, that qualified for USDA.
Oh.
Which you just would not think that
No,
because
that
you're right
doesn't-
off of 380.
Exactly.
And but that's where it always helps to check with your local lender and see what the best bets are for those programs.
Which loan type is best suited for different buyer profiles, such as families, investors, and first-time home buyers?
So there are so many different products out there that everybody seems to just be accustomed to. What's your 30-year rate today? There's so much more that goes into doing a mortgage. It's your biggest purchase that you're going to have.
Right.
So you want to get with somebody that's actually going to treat it like it's the biggest purchase you're going to have.
Yeah.
And that's where these different programs come in. If you're putting 20% down and you have a 740 credit score, more than likely you're going to do a conventional loan. But if you have 5% saved up and you have a 660 credit score, that's where you start looking at FHA. FHA was created so that people can achieve the dream of home ownership. And with conventional, you can technically still go down to the 620 score, but they're going to charge you for that. And FHA is a lot more lenient on fees and rates with the scores in the 600s than conventional is. So just seeing what your opportunities are and what your, different profile looks like, that will help us determine which is the best fit for you to save you the most amount of money over time.
I see. Again, so it's not one size fits all.
No, it's definitely not one
tailored.
size all fits all. And then obviously you have investors. A lot of the programs are 20 or 25% down for investors. We have a single family investment product that is only 15% down, which a lot of places don't have. We also have to where we don't have the Freddie and Fannie loan level price adjustments on that product, which can save people up to 3 points on a loan.
Oh, wow.
So we just did one in McKinney that it was a $700,000 loan amount. Their local bank was trying to charge them 3% because that's what the Freddie and Fannie guideline is for that. Well, because we service our loans, we have a private label servicing for investment products that allowed them to only pay half a point on there. So on $700,000, that's a lot of money.
Yes, it's a huge difference.
Yeah, we're talking, $17,500. Plus they were being asked to put 20% down, which that 5% difference is $35,000 on top of that, and we were able to do the 15% down for them as well. That frees up more money for them to buy other investment properties quicker. So it's just a great way to look at it with that product. And then same thing for first-time homebuyers. That's where we start looking at the DPAs with the down payment assistance programs.
Right.
And trying to see what the best fit is. Sometimes free money is not free money. So sometimes it makes more sense if you can get a gift from a relative to utilize that gift instead of do the grant. But that's where you get with a trusted lender who can ask you all these questions to figure out which is the best scenario for you over time.
Yes. What makes sense for each person?
Yep.
Okay.
And everybody's financial profile is different.
It's different.
Some people have paid credit on time for 40 plus years. Some people are right out of college and have only had a credit card for 6 months. So everybody's going to be different. But the nice part is with over 900 programs, we can help everybody.
Yes, you have a lot to choose.
Yes. And like I said, if we can't help them now, it's not no, sorry, you're turned down. Yeah. It's not yet. This is what you need to do to accomplish your goals.
And you do the coaching too.
All day.
Yes. Okay. So speaking of coaching, what would be the process of obtaining a loan?
So the first process is www.startwithshane.com.
Okay.
Because that way you can do an application. It doesn't cost anything. And that's where we can go into all this detail to see where you exactly stand and figure out a game plan for what's going to make the most sense for you. And that's the biggest thing. I cannot advocate enough for getting pre-approved before you even talk to your real estate agent. Hence the whole vanity webpage of Start with Shane, because if you start with me, you're going to be able to know what you're qualified for. There is no sense to put Regina in a car and go look at a $600,000 house if you're only approved for a $400,000 house.
Absolutely.
And there is absolutely nothing wrong with a $400,000 house. It's just great to know what you should be looking at, because in this economy, we also want to make sure that you can still afford to go places, and it's also good if you can eat.
Of course, yes.
So
there is no disappointment,
correct.
right?
No disappointment, and no being... The last thing we want to do for people is get them into a situation where 3 months later they have buyer's remorse.
Yeah.
Because they're struggling to make the payments.
Of course.
We want to make sure that they completely understand what their budget is. The computer tells me what you're approved for. The computer doesn't have to write that check every month. And that's the biggest thing. We want to make sure you're comfortable making that mortgage payment.
True. You want happy people.
Yes.
So, Shane, what are the documents needed to do the application?
So it all depends on if you're self-employed or if you have a regular job. They are very different when it comes to getting qualified for a mortgage. If you have a W-2, we basically need your last 2 years of W-2s, your last 2 paycheck stubs, your last 2 months of bank statements, obviously your photo ID. We want to make sure you are who you say you are. And then we can put together a profile to see exactly what you're qualified for. Self-employed gets a little bit more detailed. You usually need 2 years of tax returns unless you've been employed for over 5 years, and there's a possibility to need your last year of tax returns. But then you're also going to need a year-to-date profit and loss statement. You know, if you're looking in September of 24, you only have tax returns for 22 and 23. We're going to need that year-to-date profit and loss from January 1st of 24 through September of 24, just to show that you're still on pace for making what you've been making. Because in the mortgage world, it's all about stability.
Yeah.
We want to make sure that, if you made $100,000 in 22 and you made $125,000 in 23, that you're not on pace to make $60,000 in 24.
Correct. Yeah.
Because that'll make a big difference on what you're qualified for.
And also to show that you're still in business.
Oh, for sure. Yes. That's the one thing that all these lenders and government-sponsored entities want to make sure is that you do have the ability to repay. Because for some reason, if they're going to give you that money, they want you to pay it back.
Yeah, of course. Everybody wants that.
Yes. And that's where, getting the required documents, allow the underwriters to make sure that you are qualified.
What about foreign nationals? Are they also able to buy a house when they have a work visa?
Yes, there are plenty of different programs for foreign nationals. All depends on the situation, obviously, just like on the regular programs, there's going to be, a lot of different variables that go into it. But a lot of the programs require 20% down, obviously require the work history, and will require some form of being able to prove some credit worthiness and being able to repay some debts that they've had. But plenty of foreign national programs available.
Okay, and sometimes you can also get their credit scores from a different country. Let's say Canada, it's pretty much like in America, right? So
yes, there's different ways to go about seeing how their credit history's been in other places to try and make sure that we can figure out the easiest way to get them qualified.
That's interesting because a lot of people ask me, I know somebody who is moving from a different country. Will he be able or she be able to buy a house in America? I always say, well, we need to speak with the lender.
Yes.
And in this case, go to www.shane.com.
Startwithshane.com.
Start with Shane.com.
We got to start with Shane.
All right, Shane. So now let's talk about planning and talking about the hidden costs of a mortgage loan. What additional costs should buyers consider beyond the down payment?
So you're always going to have closing costs associated with a loan. Most lenders will charge a underwriting fee, a processing fee, a doc prep fee. Then if you do have an appraisal that you have to get on the property, you have to pay for that up front. The appraiser's not going to go out there and do all that hard work and not get paid for it.
For free.
Yes, correct. So back in the day, they finally realized that they should wait to, before they went and inspected the property, they should probably get paid. So
Right.
that has changed. So that has to be handled. But with closing costs, since COVID, the major loan programs with conventional and USDA and FHA and VA, they've all kind of done their pricing a little bit differently. And a lot of times that will cause you to have to pay a point or a point and a half origination fee in order to even get that loan. Well, what a lot of times people will do is they'll see that some lender is charging 6.5 to where another lender is charging 6.75. And the 6.5 definitely sounds better. But sometimes that lender is charging 2 points to get that loan. Well, if it's a $300,000 loan, they're charging you an extra $6,000 to save 0.25%. That could take up to 7 years to recoup.
I see.
So if rates improve over the next 7 years and you refinance, you lost out on a bunch of money that you paid up front to save 0.25. So it all just depends on your situation to see if that lower rate truly makes sense or not. Because a lot of times, especially when rates are supposed to hopefully someday get a little lower, that you don't want to wait 7 years to recoup the money that you did because you're going to want to refinance earlier and take advantage of that. So it's comparing apples to apples. So many clients tell me, well, their rate's 0.25 better. And I say, what are their closing costs? And then they say, well, we don't know. Well, that's a problem. You have to know what you're comparing so that you can see if you're truly in the long run saving money. And that's where we'll take a look at anything. And if it's a great deal, we'll tell you, hey, I would go sign that right now. That's amazing that they can give you that price. A lot of times it's too good to be true. And a couple, weeks later, they come back and we're able to help them. But a lot of this whole process is about knowledge and education. And it's knowing exactly what you're dealing with from all angles to make sure that you're getting the best deal possible.
Right. So don't focus only on the number that they're giving for how much does it cost to borrow, right? Because
Correct.
you have to see the whole picture.
Yes.
Okay.
Yes, because if they're going to charge you 1.5 to get that rate, and you can actually be 0.25% higher, but save that 1.5, that $4,500 on that scenario on a $300,000 loan, you might only be saving $30 a month with that difference in rate.
Yeah.
Well, that's only $360 a year.
A year, yes.
And you paid $4,500 to do that.
Yes.
That's over 10 years to recoup.
Yeah. Definitely.
So it just is comparing apples to apples and knowing what you're doing on there.
Excellent. So what is the percentage that a person needs to save for their monthly payment?
So I get asked that question a lot. And once again, just like everything else in this industry, it varies immensely because it depends on the situation. If you have a single man or a single woman buying a house and they don't have any kids,
it's going to be different.
It's going to be different. If you have a husband and wife and one of them does not work and there's 4 kids, it's going to be different. So it just boils down to, what you feel comfortable with budget-wise based on your situation. So the best thing that I can say on that is you need to know what you're comfortable spending. If you're paying $2,000 in rent right now and you want to buy a house for this much money, and with taxes and insurance and private mortgage insurance, that payment's $4,000, you have to make sure that if the computer says you're qualified for it, you still have to make sure that mentally you're prepared to make that payment every month.
It's not only about what the computer tells, so you need to check with yourself how much do you feel comfortable in paying per month.
Yes, because if you're going from paying $2,000 a month to $4,000 a month, but you're still with your income and your lifestyle, you're saving $4,000 total a month extra each month in cash flow, then you can probably handle that $2,000 increase. But if you're struggling at paying $2,000 a month and not being able to save any money, why would you want to put yourself in a worse spot?
Yes. No, it's not comfortable.
Sometimes you just have to be honest with yourself and understand that, eventually you'll get a raise, eventually things will get better, and maybe some debts will fall off that you don't have to pay monthly anymore. But right now you have to, put everything in perspective and be honest with yourself from a budgeting standpoint.
So leave that dream for later when that dream becomes reality.
And you can always upgrade. You can, buy a house now, get some equity over the next couple of years, sell that house. Now you're making more money, you have less debts, and then you can buy the bigger house that you wanted. Or you might be qualified for it right away. We take a look at the whole picture for you.
Yeah. I really appreciate all your insights.
Thank you.
And so what are some tips to save and prepare for home ownership? Because a lot of people out there, hopefully listening to this YouTube video, wants to know this answer.
So this is where I get into a little bit of self-promotion. We are the only lender in the country with this program, and it is a proprietary product for CMG, and it is called Home Fund It. And basically, it's crowdsourcing to save up your down payment. So if you're getting married soon, and instead of your wedding guests going to Bed Bath & Beyond and registering for towels and a toaster, you can give them a code, and they can put money into an account that you are using to save for your mortgage. One of the biggest things right now with home ownership is one of the factors that is creating people having to wait is the ability to save up for that down payment and closing cost. This program, if you can get friends, relatives, family, anyone that you think you can talk into giving you some money, and it doesn't just have to be for your wedding, it can be college graduation for kids getting ready to graduate school and going on to their first job and trying to save up money to buy a house. We will match up to $2,000 of what you get, and that's not a grant, it's not, something you have to pay back. It's just something that we will provide you. And there's plenty of other ways to grow that fund as well. So the best thing to do would be to reach out to me to learn more about that program.
So CMG is matching the dollar amount?
They will match up to $2,000. So if you can get, friends and family to contribute $4,000, we'll give you $2,000. If you can get them to contribute $1,000, we'll contribute $1,000. But we will match up to $2,000.
Well, that's wonderful. My kids are both married, so unfortunately they won't be able to take advantage of this.
But like my son's graduating from college in May of 26, and he started this program 6 months ago.
Smart guy.
So that he can save some. Yeah, he had his dad kind of help him do it. But yeah, it's great. Throw money in that account for him.
Yeah.
And, it helps him save money to buy a house.
Absolutely. Absolutely. That's great. So, and what are the most common mistakes that buyers make during the loan process?
Oh, that's always a fun call.
Is it?
I'll share an example with you.
Sure.
I had someone that I told not to buy a car.
Oh.
They told me they were looking for a car, and I said, you can't buy a car yet.
Okay.
They didn't. But, we pull credit a couple days before closing, and there's a car dealership on there.
Oh.
And I said, what'd you do? And she said, I didn't buy a car. You told me not to. I leased it.
Oh.
Well, a lease is still a payment that you're obligated to pay.
So that affects
It counts towards your debt to income ratio.
Oh, no.
We had a lot of hoops to jump through. We were able to fix it and help her buy. But that was a very contentious 48 hours before her closing to get that done. A lot of times people will see, if they're buying Memorial Day weekend, they'll see a Memorial Day sale that starts Thursday and they're not closing till Friday, and they can get 0% on that new couch. You're going to have no house to put that new couch in if you open up that credit card in some cases. So and we send email reminders, we send text messages, we tell people, you remind them for us. Do not buy, and then we've also, because of that other situation, had to include do not lease either. Other things that can, create, because lenders do check credit up until the day before day of closing to make sure that you don't have any expenditures that aren't accounted for out there. So, No
Interesting.
0% financing, no buying a new car. Just be smart about it. And if there's something that comes up that is a necessity and has to be done, talk to the mortgage person up front to make sure that it's not going to put you in a bad spot.
Right. So that's not going to kill the deal.
Yes, correct.
And can a job change also affect your loan?
Yes, definitely, definitely. Especially if you quit 3 days before you buy your house. If you are going to be changing jobs, usually it has to be in the same field. Usually you have to have a non-contingent letter stating what your new accepted role is, salary, start date, all that fun stuff. But usually it has to be in an industry that's similar to the one that you came from. So changing jobs in the middle of the loan process is highly not recommended. But if you're, in a situation where you have to, please reach out to your local lender to make sure that it's not going to affect you being able to buy the house. Sometimes people need a change, and that's completely understandable. But that change has to not affect your ability to buy.
That's why you need to talk to the lender.
Yes, for sure. 70% of the time, it's not a big deal. It's just you have to document it and know what it is. 30% of the time, it could leave you not owning that new home you're supposed to buy in 3 days.
I know.
So it creates a big problem sometimes. So it's just better to be proactive and make sure that you're, paying attention to all facets of this process and being open and knowing how it all works to make sure that you don't put yourself, your real estate agent, your lender, the title company, your homeowner's insurance agent, put them all in a bad spot because all the hard work everybody put in over the last, 4 weeks could be for naught.
Can be gone.
Yes.
Yes.
Like that.
Yes. And, in your industry, in my industry, there is never a single dull day.
No. That's where I joked earlier that I used to have hair. Doing this for 27 years, I've seen it all. I've done it all. We've been a part of it all. There are more great days than there are bad days. But when somebody, switches a job or loses a job a couple days before closing, that causes a lot of hair to fall out.
Oh, my goodness.
And
yes.
I do not have much left. So, please don't make that mistake.
So, Shane, how can I apply?
So it's simple. It's as simple as I can make it. www.startwithshane.com. That's SHANE. That takes you to my CMG Home Loans website. There's an Apply Now button. It doesn't cost anything. And we can start talking about everything we just discussed on this podcast to get you into the best possible shape to buy a home.
Perfect. Thank you so much.
You are very welcome. I greatly appreciate the opportunity to do this with you today and look forward to helping people that are listening to this podcast.
Well, thank you, Shane, for joining us today. You certainly gave so many insights about the buying process, and I'm sure that everyone is so thankful for all your recommendations.
Oh, and thank you for having me, Regina. I look forward to helping your subscribers achieve their dream of homeownership.
I hope today's chat gave you some clarity on navigating the home buying journey and understanding the ins and outs of financing. Remember, buying a home is a huge milestone, and with the right guidance and a solid team like Shane's, your dream can become a reality. If you found this video helpful, don't forget to hit that like button, subscribe to the channel, and turn on notifications so you never miss out. And hey, if you know of anyone who is thinking about buying a home, share this with them. It might be just what they need to get started. Thank you so much for hanging out with us today, and I will see you in the next video for more tips, insights, and all the good stuff to help you crush your real estate goals. Until then, take care and keep dreaming big.